Hello everyone, hope you had a wonderful trading week. Let's go ahead and jump right into it here with the dollar. Starting off at the weekly time frame view. Last week I was looking for the dollar to basically retest and then fail near that 99.30 level. And we ended up pushing up higher as we continued to build support. Then towards the latter part of the week, we saw a pretty nice little rejection. So the main key here is that I'm focusing on here is about reestablishing that support at that 99.30 level. If she holds that level, then there's another possibility that we'll go ahead and shoot back up to test those 99.80s and then make a run possibly to 100 to 100.45. Basically, that's going to be right up in here at that 78.6 level. So again, we are trying to continue to hold that support near the mid fib area. Again, that 99.30 level is crucial. If she fails to get back and hold that level, then we'll be looking for a pretty strong reversal here back down towards the 98.50 firstly, and then onwards down to the 97.90s. So that's what I'm seeing for the dollar. Really not much to say here. I will just go ahead and update this just a little bit, as I do believe we'll be able to get back up in this area. As far as the continuation of the move up above this level, it looks a little bit questionable at this time, but again, dollar crucial area is that 99.30 level. Holds that, then we can see another push back up, and a break of that previous high obviously leads to a continuation of a squeeze up into the 100.45 level, which is the 78.6 fib retracement level. So let's go ahead and continue on forward here. I'll just go ahead and save this. And gold, well, gold had a phenomenal week. I was looking for, where did my drawing go? There's a little bit of it right there. I think that's a 4-hour time frame view. I'm not sure. I don't really use this template except for all of you folks, for your eyes to see, that is. So we ended up not really pulling back and churning as much as I had thought. We ended up just continuing this bull run, which has been fantastic. So just going back to that weekly time frame view to get that larger picture in view, which is gold is continuing to obviously go up here. Looking for some level of retrace here back to like the 60-30, 60-40 area, namely as the two first levels that I'll be watching for. And then obviously it wouldn't be out of the question for us to retest like the 16-14 area, which I would like to see after such a strong move. And then obviously looking for a continuation move higher. Now the reason why I say higher, it's pretty simple. The fib count just says that we still have more to go. So as far as the near term is concerned and what we'll be looking at for the very immediate future as far as resistance levels are concerned, the 1650 level was just kind of like the first test after breaking through here, and that's just my opinion of first test, which is just looking back here at this previous levels that we were at before. There's a lot of price action in this general vicinity. So again, that's like the first push, and then you have your secondary, and then if you have no success on that third push, then that's when you have that reversal and then consolidation. So essentially what I'm looking for here is maybe a move back up in the 1660 to 1666. It loves those triple sixes for some reason. Well, even the indices do too. S&P I think bottomed out like 666 or something like that. But anyway, looking really good for gold, and just kind of looking at the longer time frame, monthly time frame view. I'll just switch it over to the spot price. It's a little bit easier to see. There's less rubbish on this one. So looking out at the larger picture, I mean, you can see what gold is doing here, and essentially it is making a very large cup pattern here, and then we'll be looking at the handle getting made down near that 1800 level, and then we'll be breaking out, heading up into the 5,000 to probably 7, maybe even 10,000 over the next year or two, maybe a few years. So it's setting up for a pretty substantial move here. I'm not sure what the trigger is. Really don't care what the trigger is at this time, as long as we're still all alive and able to do what we like, which is trading and seeing our family and all that stuff. Because money is no good if everything goes to crap. So just saying, as far as the pattern is concerned, looking like a nice large cup and handle to be in development here. Still have to get up to that 1732, which is the 78.6 level. This move does have more upside push, so again, I caution, if you're going to be going against the trend, you're just asking for a butt kicking. That's just as politely as I could say that, and I continue to just say that because I still see on Instagram and other places where people are taking a really large risk and trying to bet against the trend. But you have to look at this in a totality type of a view, which is, you have indices at record highs. Coronavirus impact still relatively unknown as far as, when it's going to stop spreading, which it's still spreading, and the true numbers out of China are still, questionable at best. So that all being said, there's a lot of, hey, how much more can these indices possibly produce for us and these risk assets? So there's a lot more money and big money shifting, as you can see here with the recent run in gold. More big money is settling for safety versus risk assets. So that all being said, yes, we are going to see a little bit of chop in here. I do believe 1660 to 1666 could be the near term peak, and then maybe in the next coming week or two, we'll see another spike back up here towards the 1730 level, and then higher as we go out in time, obviously to 1900 plus. So again, we'll be looking for that pullback here near the 1800 level when we get there. Obviously, we have to hit that 1900 level first, 1905, 1910, and then we'll be pulling back, grinding along that 1800 level, and then upside breakout she'll go. And that's obviously going to take, in my opinion, a few months to years for it to get to the upper level targets, which is the 5 to 10,000 range, like I'm thinking. But in the near term, it is going to be chopping around a little bit in here, get up to that 78.6. That's your 1734 price target, and that's going to be pretty much coming up in the next month or something like that. So that's just how I'm seeing it right now. Let's go ahead and continue on forward with crude oil. Now, crude has continued to be quite erratic, and the irrational exuberance has been plentiful, which is exactly why I have been avoiding it. We do have, I believe, the OPEC meeting coming up this week, so obviously the bulls are still going to be relatively, trying to push the prices up. And in my opinion, it's just to get a better short position, because I still think, and as I showed last week, we'll be looking for price to, if it hasn't already, peak out, just drop into that daily time frame view. So again, was thinking that maybe we get up to that 53.20 level and then do a reversal. They obviously squeeze it a little bit higher, which is again the reason why I'm not focused on energy, because it's being erratic, and when it's erratic, I can't adequately measure my risk versus reward, so therefore I do not trade it. Same thing with natural gas at this time. And indices. I'm mainly focusing on gold right now. If anybody's curious, mainly just focusing on trading gold, because that's where you can measure the risk versus reward. It's a safe place to be, and the trend is clearly to the upside. That all being said, crude oil, I do think that we have put in the near-term peak, which is that 54.40 level. Not out of the question for us to re-challenge to 54.20 maybe, and then go for a reversal down, as we're going to see another disappointment out of OPEC and all that stuff. So monthly time frame view, you can kind of see we are trying to hold on desperately to that 50-50 level. Haven't made much progress compared to the prior months. Red candle, we haven't dug up deep at all. So I still believe firmly that we are going to be going back down into that 48 to 47.60 area, if not lower. And that's just what I'm seeing on my end with the indications and chart patterns and such that I'm looking at. So if somebody sees something else different, you're entitled to your own opinion. I'm just saying that my outlook still, I don't believe that we'll be supporting these prices, and we'll be looking at a break underneath of that level here, which is around that 48 to 47.60, and failure to get back above, believe it or not, will actually lead prices even lower, retesting like the 42.40, and then in the future, not so distant future, start going back into the 37, and then possibly even back into the 26s, believe it or not. So again, that is not a good look for or good outlook for the rest of the general global economy, I should say, as that means that we are looking at recessions, and who knows how bad these things will be on this round, since QE was supposed to fix everything. And of course, I say that sarcastically, because you can't throw money at something and expect it to actually fix something when you haven't fixed the underlying problems. So that all being said, again, just to reiterate, looking at 54.20 retest maybe, and then a reversal here for oil back down into the 50-50 area. They'll try to finish off the month around that 50-50, 50-75 level, maybe 51, to finish off the monthly candle with a little bit of green here. Again, you can finish it off near 52, 51.78 and still have it a little bit green. But that selling pressure is still here. Don't let the fake out really get to you to that degree. So I just see prices basically in a general range here of around 54.50 down to the 50 to 50.60 area for the rest of this week at least, and then next month we should start seeing some more volatility, and then start looking at cheaper oil prices again. So that's what I see for crude, and let's finish it off here with natural gas. Now, natural gas, in fact, did in fact hit 2.028, just shy of the 2.03 level that I was looking at. You can see that on the weekly time frame view. I think this was supposed to be on my monthly, not on my weekly. No, it is supposed to be on my weekly. So I guess I was zooming out, trying to compare it to the previous level. Yeah. So I will go ahead and just move this to the side right now and just essentially focus on this candle right here. That's essentially what I was using to look at for an upside target here beyond that gap fill at 2. Now, the thing about natural gas here is, a lot of people are going, oh, have we bottomed or have we not bottomed? Now, the big question, in fact, is, are we going to be able to get back above 1.949? That's been a pretty significant area, and it's basically a range that we're looking at here. So, you're looking at 1.949 right here, and then we have 1.9 on the bottom, was around 1.909-ish as the general range that we were looking at previously back in here. So that's the range that we were kind of floating below for a while. Then we finally got back above it, essentially blah, blah, blah. We already did the gap fill, as you all know that are trading this. So I'm not telling you anything you don't know. So the key here is as far as what I'm watching for. So this is where the meat and potatoes of what I have to say comes in. So this range right here is crucial. Now, I do believe that there's a pretty strong opportunity for natural gas, just like with crude, to do a bounce back up and to test the upside or near the upside level, which in this case is going to be 1.949. She continues to fail at this level, then she'll retest the lows of this range, which is the 1.909 area, and a failure to hold this level, and just put in some basics here, looking at your trend line support. So failure to really hold on to that 1.87 level is going to deliver the next test of support at 180, and beyond that, failure is going to be a retest of the bottoms and then maybe even a break further to the downside, believe it or not, as there is a lot of supply of both natural gas and crude oil out there with nowhere for it to go. Obviously, you're going to have to drop prices just to try to stimulate demand in some way. So that's just basics of economics, right? So as far as this is all concerned, keep your eyes on this range here. Upside push above 1949, then you'll be looking for a 198 test. It's going to be a lot of resistance in this area here. And same thing here. This range is basically the bread and butter. If she can consolidate in this area, then there's going to be more of a probability that we could see an upside push or a continuation. But for right now, it's not looking like it's going to be much to deal with. So monthly time frame, keep that in your front of your or your vision, I should say. You only have basically this week here for this candle to finish out. So if it does go ahead and retest 1.8, that's going to make this candle red, and it's going to be showing that there's still more selling pressure out there for lower prices to come yet. So as I said before, looking back on the monthly time frame, wouldn't be out of the question to see us dip into the 170, 160 range, and then who knows if that even holds, just given what's happening in the global economic picture right now. Don't just assume that we're going to see a double bottom here. It could be, just a drop down here and then churn, and then we could even break even lower, believe it or not. So again, as with all double tops, double bottoms, always wait for your confirmation and put in your stops. Don't just assume that it's going to be the bottom or going to be the top. Always have to use your stops, because it's better to have a small loss than let a loss just keep running and running. That's an inverse way of looking at it. Always let your runners run, cut your losses quick, just the name of the game. So if anybody has any questions, comments, or concerns with anything I said, you can go ahead and comment below. Make sure you subscribe to my videos. I do these once a week. I am going to be doing some trips in the upcoming few weeks. I'll let everybody know in the discussion section of my channel of when I will be away and when I will be able to do videos again. But as far as what I could see right now, next weekend I will be putting them out, putting the video out as usual. So again, green trades to you all, and make sure you protect yourselves.